Okay, we'll go ahead and get started, and then as people filter in, they'll catch up. So thanks to everybody who's attending the webinar today. This is the second annual fall webinar we've done, and this year we wanted to focus on grape crop insurance. This is a question that I get throughout the season. So I know growers in Minnesota and surrounding states are definitely interested in hearing about this. So I appreciate Craig Christianson from USDA coming on to talk to us about this important topic. So Craig is from the USDA Risk Management Agency, and his office is in St. Paul. So that's where you are right now, right? That nice view?
Correct.
Yep.
There we go.
On the 18th floor.
Yes.
All right, so just a couple of housekeeping things. Everybody who's attending should be muted right now. This just helps us prevent people from accidentally turning on their microphones and talking in the background. And so if you do have a question, just go ahead and if you hover over your screen with your mouse, a bar will show up on the bottom, and one of the icons says chat with a little voice box. So if you click that, you'll see something come up on the right where you can type in a question. So anytime throughout the presentation that you have a question, just type it in that little chat box at the bottom. And while Craig is talking, I'm going to be monitoring the chat box, and we'll kind of pause every few slides if anyone has questions, so that we can get those answered promptly. All right, so I'm going to let Craig introduce himself and tell more than I can about what he does, and then he'll get started. So take it away, Craig.
All right. Thanks, Annie. So yeah, my name is Craig Christianson. I work in the St. Paul Regional Office for the Risk Management Agency, which is a part of the United States Department of Agriculture. I've worked here for about 5 years. Before I worked here, I worked for the National Agricultural Statistics Service, which is also a division of the United States Department of Agriculture. I grew up in Wisconsin, just outside of Madison in a town called Cottage Grove. And so now here I am in Minnesota. The reason we wanted to reach out and talk to people about insuring grapes is that for 2020, we've expanded the program into 5 counties in Minnesota. And as Annie said, we get questions about what are the insurance options as a grape grower. So hopefully we can give you a little more information. And if you have questions throughout, like she said, just stop and let me know, and we'll do our best to answer them. So. Just go over the agenda for the webinar tonight. I'm going to cover kind of just some crop insurance basics. For those of you that don't have a lot of background on crop insurance, the federal crop insurance program in general, we'll just give a brief background on that. And then I'll go into more of the grape policy itself. And then we'll talk more about, the grape insurance coming to Minnesota and the policy here, and kind of what that means, what the advantages are to that. And then we'll talk more about, how to get federal crop insurance for grapes if you live in a county or somewhere where the policy isn't offered. That doesn't mean that you can't access it. It just, you go through a process called a written agreement. And so we'll talk about what that means and what you need to do for that. And then we'll finish it up with some loss and premium examples, look at some numbers, just kind of showing how it works and how the calculations are done, and hopefully it's a little bit real life and kind of put some general information into some numbers. And then also at the very end, we'll talk about other insurance options out there other than just our multi-peril crop insurance. Got a disclaimer that, if I were to make a mistake or something I say in here contradicts what is in our policy or procedure or any of our actuarial documents, it would not supersede that, but hopefully that will not be an issue tonight. So to start, for a little background, in 1938, Congress created the Federal Crop Insurance Corporation, or FCIC, and that was done to carry out a crop insurance program. This was just part of several initiatives that were created to help the agricultural industry recover from the Dust Bowl. So RMA itself wasn't created until 1996. And the people involved in the crop insurance program, we have the FCIC, which is administered by RMA and is made up of a board of directors that consists of 9 members. And the board's role is to approve new policy, plans of insurance, or other major modifications to an existing plan. The Risk Management Agency, which I mentioned is part of the USDA, is made up of 10 regional offices, 6 compliance offices, an office in Kansas City, and then staff in Washington, D.C. On the private side of this, we have 16 insurance companies that are able to write these policies. And these companies are referred to as approved insurance providers, and they have a contract with FCIC and RMA to sell and service these policies. And these companies work with over 15,000 individual agents across the country who actually sell the policies. So I work here in St. Paul Regional Office, which is one of our 10 regional offices. And this just kind of gives you an overview of the areas that we cover. So our office here covers Minnesota, Wisconsin, and Iowa. A little bit how it works. So as I mentioned, it's a public-private partnership between RMA and the approved insurance providers. And some of the advantages to this relationship are that, as a producer, you're going to be covered even in times of disaster. So it won't be a situation where you have a disaster, the losses are so great the company can't cover it, and instead of paying out all the indemnity, they basically just fold, go bankrupt, and then you're out. It has the backing of the government. So you have that peace of mind knowing that. One of the advantages to working with private industry is, the private insurers can deliver an efficient service. And as a producer, you can work with an agent that is from your community and knows the area that you're from and knows the community that they serve. So you have that local agent there for you. It's not somebody far away in Kansas City or Washington, D.C. or even St. Paul. So with that comes our roles and responsibilities. Here at the Risk Management Agency, some of our responsibilities are to develop and approve policy terms, rates, and prices. So things, like what the actual rate is that's going to determine the premium you pay and different policy terms. And a lot of that's done in our Kansas City headquarters office, and then is sent to the regional offices to review. So we do a lot of work on reviewing that and taking our local knowledge and applying it and making sure things look good. RMA also is responsible for providing oversight to the program. The note there says less than 2% improper payment. So really the role is we want to make sure that payments are accurate, they're going out when they should be, and they're not going out when they shouldn't be. And that's kind of the role of compliance to do that. And then also, our role is to review new products and program expansion. I guess one example would be, expanding the program into Minnesota. Working here, we saw there was interest. We had people that actually were requesting and obtaining coverage. So we did some research, looked at some University of Minnesota data and determined, that it was ready for expansion, and we put together a package and that was approved. On the other hand, the AIPs, their role is they have the contract with the Risk Management Agency to sell and service these policies to producers. And that is through what's called a standard reinsurance agreement, or SRA. And what the SRA does is it basically establishes the terms and conditions under which FCIC will provide a subsidy and reinsurance on eligible crop insurance contracts. So to further on that, the AIPs, really their role is selling these. The terms are set at RMA, so what they're really competing on is not lower prices, lower rates, but on service. And that's how they can distinguish themselves and compete in that marketplace. So federal crop insurance policies are a commitment between the producer and their insurance provider, so that insurance company. So your contract is not with RMA. RMA has that contract with the companies, and the companies have a contract on that policy with the producer. So we see here the producer agrees to insure all eligible acreage of a crop planted in a particular county, which means exactly that. So if you're looking to insure your grapes and you want to insure these Marquettes over here because they haven't been doing so well, but you know, this variety, these Frontenacs are looking great, I don't really need to insure those. The policy insures all of that commodity that you have in that. And again, the insurance company's end of the bargain is they agree to cover the producer against natural losses that occur. A little overview of how the insurance cycle works. So instead of starting at number 1, I'll start at number 11 here where you see program changes. Oh shoot, I'm missing some. Okay. The contract change date. So what that means is that RMA each year by a certain date has to have all of our policy terms set. And that contract change date for grapes is August 31st. So by August 31st, we have to have that policy all ready to go. At that point, that policy is able to be offered for sale to producers, which takes us to number 1, insurance offer. So at this point, insurance is being offered. Producers have up until the sales closing date to purchase a policy, which for grapes in our region would be November 20th. If you have a policy in place already, that policy is going to renew automatically unless it's canceled by that sales closing date of November 20th. So we reach sales closing. Your application has been accepted by the company. So we have acceptance, and then at that point, insurance is going to attach to those grapes. So those grapes are now insured. Further down the line, we have our acreage reporting date. So this is the date by which you have to report all of your acreage to the company and actually all of your production from the year before so that they can know what they're insuring and how much. And that date would be January 15th. Once that's done, the acreage report is in, the production's been determined, the company's going to come up with a summary of coverage. And that's going to determine how much coverage you have, what the guarantee amount is. And once that's set, they can determine how much premium to bill because it's based on your guarantee. So then we get into the season, we're in the middle of the season and it's growing, the grapes are insured, we know how much we're insured for. And then basically the next step would be if there was a potential loss. So if you have a freeze or a hail, or you just, you notice that the conditions haven't been that well and it looks like you're going to have lower level of production than expected, you complete number 8, the notice of damage. You would let the company know that you think you have a loss. The company would come out, they would do an inspection, measure, and up through harvest and everything, they would determine whether or not there was a shortage which led to a loss. And if there was, there would be an indemnity claim and you would get paid that indemnity based on the amount of loss. At that point, claim is paid, insurance season's over, we have until contract change date and cycle starts again. Listed here some of our insurance policy documents. I'm not going to go into depth on these. I just wanted them to be out there so if people are interested, they can know where to find them. You can go back to this presentation and I have all the links and just give a brief overview. They're listed here in our order of precedence, but I'm going to start at the bottom here with the common crop insurance policy basic provisions. These basic provisions are basically applicable across all of our multi-peril programs. It's a general overview of all the rules and, like I said, policy provisions. And then we have our grape crop provisions. So these would be specific to the grape policy. They may alter or add to some of the provisions in the basic provisions. And then finally, we have what's called our special provisions of insurance. These would be found in the actuarial documents, and these would be specific to a county or region. And we'll talk a little bit about those a little later. Again, this is in order of precedence. So we have our basic provisions. Grape, the crop provisions would trump the basic provisions if there's a difference, and then special provisions would trump both of those. Some of our other procedural stuff in our handbooks, again, same thing, just for reference, real briefly, we have our crop insurance handbook. This is going to detail procedures for creating your APH database, your actual production history database, how to break out your units in terms of optional units, basic units, and things like that. We have a loss adjustment manual. That is kind of our general loss adjustment procedures. And then also the Grape loss adjustment handbook, which basically goes into more detail on how to adjust a potential loss for specific things. So what does a policy actually insure? So the insured crop, and this is defined in our Grape crop provisions, and it defines the insurability requirements for grapes for our policy to be those that are grown for wine, juice, raisins, or canning, and that are grown in a vineyard that, if inspected, is considered acceptable. So what that means, there's two inspections. One is a self-inspection called a pre-acceptance worksheet, a PAW, and that's completed by the producer. And that just basically is filled out each year and says, you know, here's the condition of my vineyard. This is what I am growing. This is what I have. This is what's new. Here's any potential changes. For a new policy, a company is going to come out and do what's called a perennial crop pre-acceptance worksheet, or we call it a PAIR. And so that's basically just doing an inspection of the vineyard, making sure that you know, it has full production potential, and you know, basically should be insurable. One of the other requirements for this policy is the grapes must have produced an average of at least 2 tons per acre in one of the most recent 3 years. I'm going to stress this as I go forward, but records are going to be very important with this policy, and this is one of the areas where we're going to see that because it does have a minimum production requirement. It also has an age requirement that the grapes will not be insurable until the 5th year after setup. Well, that's what's required for insurance to attach to the grapes. And this, the type of policy that the grape policy is called an actual production history, or APH policy. And this policy is going to provide protection against basically natural causes of loss, as you can see listed down below there. You know, it's not going to protect against an inability to market it unless it was due to damage caused by insurable cause of loss. But if you just have grapes and they're fine, but there's nobody that is around to buy them, that's not a natural cause of loss, so this policy wouldn't cover that. That's just one example. Another thing to note is, you know, in one of the bullet points it says unavoidable damage from insects and disease, which it does cover that, but doesn't cover it if it's due to insufficient or improper application of your control measures. So you still have to be spraying for the bugs and spraying for disease.
Hey, Craig, I got one question.
Yes.
Are polar vortex events insurable? Multi-year loss due to extreme winter events.
Multi-year. Okay, so that initial year that you see the loss, I mean, that would be insurable. What the effect that polar vortex is going to have for multiple years is, I had mentioned before, that PAW, the self-reporting kind of inspection the producer does. The insurance would actually end up being adjusted down based on that if those vines haven't recovered. So it's not going to cover the future damage, unfortunately, but it will cover the damage done that initial year.
Okay, thank you.
Does that make sense?
Mm-hmm.
Okay. All right. So this APH is, your guarantee is going to be based on your individual actual production history. So your guarantee is going to be based on what you've actually produced in the past, which again is going to be based off your records. You have them. an indemnity is due when the value of your production account is less than the liability or your guarantee amount. And we'll do an example. We'll go into that in a little more detail later. So the insurance period is going to begin on the latter of these dates. So November 21st, which is again the day that insurance offer begins. It's the day after our contract change date. So the policy is set and is now up for sale. So if you're a carryover insured, meaning you had a policy the year before and you're not canceling, it's going to renew, your insurance is automatically going to renew and attach on November 21st. If you're not a carryover policy holder, the date that your application is accepted would be when the insurance policy begins and attaches. Or, and again, we'll talk about written agreements later, but if you've applied for insurance through a written agreement, the date that that written agreement is signed by both parties is when that insurance is going to attach. And then it'll end at the earliest of, so total destruction. Once you harvest those grapes and they're off the vines, that's when insurance ends for them. If something happens to them later on, they are no longer insured. If you have a loss, as soon as that claim is finalized and indemnity is paid, that's the end of the insurance period for that year. Or if you were to abandon the crop, say it's, it's not looking very good, you still have to maintain it. If you choose, look, I'm not going to pay the money to spray it and take care of it anymore, you're just going to abandon it, insurance would actually end at that point. Otherwise, if there is no losses and things go well throughout the year, November 20th. And I've covered some of these already, so I'll go through this quick, but just some important policy dates. Again, sales closing date, November 20th. If you're interested in a policy for 2020, we have until November 20th. And your acreage and production is reported by January 15th of the following year. And you report all of your acreage, production, and any potential losses to your insurance. So here's just kind of a picture of where we have grape policies across the country. These are all the counties that have the grape program. You can see now we have our 5 counties in Minnesota, but we don't have any in North Dakota, South Dakota, or that border Minnesota, or Iowa, Wisconsin, or other 2 states in our region here. So this is a first for our region, these 5 counties in Minnesota. And the counties that they're available in for the first time in 2020 are Renville, Blue Earth, Jackson, Freeborn, and Winona. One of the advantages to us getting the program into counties in Minnesota is that it's going to be more relevant to the growers here. We're going to try to make it more relevant, the varieties that are actually grown, the prices that are found in this area, and the yields that are found in this area. So we have had insurance in place in our region before, and we have to find a reference county. And previously we'd been using a county in Michigan. So not only do we have this here now, but hopefully we can be collecting data and getting better data and making it even more relevant to the producers here. If we see interest, there is potential for future expansion. It's just, again, dependent upon that interest. So we can, again, expand into more counties if people in surrounding counties are producing grapes and are interested in insurance. So here's the actuarial information. This is where we keep kind of the policy terms, rates, things like that. I'm gonna go into a little bit of the Minnesota ones here. This can be found on our website, all this actuarial information, and the link is at the bottom of the slide. We have 2 different groups. Group A is basically going to be your cold hardy cultivars, varieties that are grown for juice, jelly, or other processing. And then we have Group B, which is going to include all your varieties, your cold hardy cultivars that are grown for wine. And we'll go through a little bit more of this actuarial information and what you can find in here. So I kind of zoomed in on the tabs, and I'm not going to go through all of them, but a few of them. We talk about the types. The prices tab there is going to show you what the prices that we use for these counties. The type A are going to have a value of $307 a ton, and type B, $1,534 per ton. And these are going to be used when determining your premium and indemnity amounts under the policy. We also have something that's called the T yields. And these are basically your estimated yields that would be used in your database, in your APH database, when you have less than 4 crop years of actual yields available. So, you know, say you've been producing, you're in that 5th year, and you're just becoming insurable. If you set up your APH database on the block, the years that were not insurable we can substitute with a T yield, which again is an estimate of expected yield for that. So for Blue Earth, it's 2.5 tons an acre. In the other 4 counties, it's 2 tons per acre. And that special provisions tab, I'd mentioned special provisions earlier. That's where you'll find those definitions of groups A and group B. And it also it defines where the insurable age of the vines is, which we had mentioned was 5th year after set out. This information's in the subsidy tab. The premium subsidies for this policy, so you have an option to choose between 50 to 85% coverage levels. And the subsidy kind of varies based on which coverage level you select. So the premium subsidy, that's percent that is going to be covered by the USDA, and then your share of that percent's on the bottom. You can only select one coverage level and price for each grade. And since we kind of have a Group A and Group B, if you have all wine grapes, you're going to have one. You're only really going to be able to select one coverage level for all your. So can you get the multi-peril crop insurance if you're not in say you're in Minnesota or Wisconsin or Iowa or one of the other states, and you don't have this policy in your county? And the answer is yes, and it's through our written agreement process. It's a little bit more work. There's certain criteria that have to be met, and we'll go through those. So a written agreement is defined as, it's a document designed to provide crop insurance for insurable crops when the coverage or the rates are unavailable. What we're going to do in that case is we would use terms and premiums from a reference county, which likely would be one of our Minnesota counties. And you would actually use your actual yields to set up your database. So it is still available. And the link down below here is a handbook for written agreements. If you are looking to get a written agreement, it goes through all the requirements for you. Like I said, I'm going to go through some of them here, but not in great depth. So it's something for future reference if you want to use. And bring it to, you can bring it to your agent if they're not familiar with how the written agreement process works. So here are the requirements for a written agreement. These come from the handbook I just mentioned. And again, I'd like to stress, good records is going to be key to this. First of all, you fill out a form. You're going to complete an APH database, and this is where those records come in. You have to have at least 3 years of verifiable records to establish that production can be successful in that county. There needs to be evidence from an agriculture, so a letter from an ag expert, like someone from Extension. With grapes, you're in Minnesota here, we pretty much have that documentation already, but it's good just to send it in. We request that you send a map of your vineyard detailing what varieties and where you're planting. Describe the practices, variety, age, the pair, which we talked about, the paw we talked about. You need to mention when the crop is to be harvested, and basically where you're going to be selling it and to who and how far it is. This is an example of a written agreement application form. And again, this is due by, it needs to be completed and signed by November 20th, which is the sales closing date. As I mentioned before, you need to have at least 3 years of verifiable production records. So verifiable meaning like third party. And again, this will be used to establish your APH and also to demonstrate that you've grown it successfully in the county. I took a screenshot here. This is from our crop insurance handbook. These are just some examples of the records that you can use for these verifiable required records. And then this here gives the required information that needs to be contained in that record that you provide. One thing to note that converting gallons of wine back to tons of grapes is not an acceptable record, so it needs to be actually the net tons of grapes delivered by variety. We'll put in here the acceptable records for vertically integrated producers, because I know a lot of you out there are probably using your own grapes to make your own wine. So you're basically processing your own grapes. How do you get a third-party record if you're not selling them to somebody else? This mentions here, for wineries that produce their own grapes, the weight can be recorded on the form used for reporting to the Alcohol and Tobacco Tax and Trade Bureau. Here are just some examples of acceptable records that you can use for this. You need the 3 years for the written agreement, but you're also going to want these when you apply for, if you're in a county that has it, for your policy to establish that AP. Because if you've produced it, the company is going to request your records. And also, you're going to need to establish that minimum production. So here's just an example of one. It's a sales receipt here. It shows the variety, how much was sold.
I have a couple of questions real quick.
Okay.
An okay stopping point?
Yeah, absolutely. Perfect.
Okay. Just didn't want to get too far. Somebody asked, does an acre include mid-rows, the area between the vine rows?
Yeah, I guess it would. I mean, it's something I can verify.
Okay. That might be, I'm wondering if it's a case-by-case basis too. If a vineyard has a really big space, like going down the middle of their vineyard, that's about 20, 30 feet, would that space be included?
I would think so. I mean, really, the thing that's going to matter is going to be your production. So, if you count it as an acre or you count it as 2 acres, if you have from that area or from that block, say from this block you have 10 tons, it came from this one block. Well, if that block is, half an acre, if you have like other empty area, it's 1 acre, it's going to be an average yield, but your guarantee is going to be based on that average yield. Does that make sense? So it could be higher or lower yield, but that's what your coverage is going to be based on, kind of over your overall production. I don't know if that makes sense.
Okay. The second question, which I feel like you're getting to, is can the quantity of grapes be self-reported?
For establishing, so if you don't have a third party, you're not selling it to someone else, it can be self-reported through, I'm just going to skip ahead here. So you basically have to have records that show the amount you produce. Now, if you have a pick record like this, and it's for your own orchard, this would be acceptable, but it does have additional requirements. So the handbook would say that this would be acceptable, but in addition to this, you need to provide verifiable proof of payment to the picker. So basically something else showing that validates the amount that you're reporting, if requested.
Okay, thank you.
Yep. So I skipped over this, but this is just another example of acceptable record. And here's our pick record. Just an example of vineyard map. One thing to mention, it should correspond with the company's inspection report. Here's another example. This is an example of the pair form that the company would use. You can see it's kind of just, they're going to measure it out by block. They're going to put, the years planted, the acres, the variety, all that things are going to determine, what's the production potential on it. Is it suitable for being insured? So this is this is just, like I said, example of what the company is going to fill out. All right. So how do we get to the production guarantee? What is this insuring? What's your guarantee? We're going to look at the approved yield. So the approved yield is determined by your APH database. It's going to be an average of your actual yields, or if you don't have at least 4 actual yields, could be T yields combined with your actual yields, get an average. And that's where your approved yield is going to be. And then you're going to select your coverage level, like we had shown on the subsidy thing, somewhere anywhere between 50 to 85%. Take the approved yield times your coverage level, and that's your per acre production guarantee. Take that guarantee times the total number of acres, and that's your total production guarantee. For the claims process, if you do believe you have a loss, your responsibility is to notify your agent within 72 hours of the discovery of damage or your loss of production, but no later than 15 days after the end of the insurance period. The notices can be made via telephone or in person, but should be confirmed in writing. So let's go through an example of a potential loss. So let's say you elected a 75% coverage level. You have the 100% of the price selection of the $1,534 per ton. You have an approved yield of 4 tons per acre. You have 100% share in that commodity, so you're not, you're not sharing with another producer. Each have 50% share. You have 100% share. You have 10 acres, and in the year you're insured, you actually only produce 2 tons per acre. So it's kind of a basic example, but kind of gives you an idea of how it works and how you run through it. So you have 4 tons per acre approved yield times 75% coverage level. You have a 3 ton per acre guarantee. You have a total of 10 acres, so you have a total guarantee of 10 tons production. That year you only had 2 tons per acre over 10 acres, so you only produced 20 tons of actual production. That leads to a 10-ton loss total. The price selection, as we mentioned, was $1,534 per ton. So your total gross indemnity would be $15,340. This policy with this criteria ended up having a $3,380 premium owed by the producer, not total, but producer share premium. So that would come out of the indemnity paid, and the net indemnity paid out to the producer would be $7,970. A couple notes in the left-hand corner there. If you have an unharvested loss, so the damage is so severe that you're not even going to harvest anything, it's the total loss. That would be calculated using the price selection minus a harvest cost. Since there was no expense to harvest it going in there, they do take out a value called the harvest cost. That can be found in the actuarial documents under the prices tab. And again, this is just a rough example. If you are interested in obtaining insurance and you want a more specific example, contact a crop insurance agent. They can work with you on this. I'm going to go into a little more detail how I got this $3,380 premium amount. So on our webpage, we have a tool called the cost estimator. So if you go to rma.usda.gov, that's our homepage, and you can see under this tools dropdown, there's a dropdown menu, and you can see the cost estimator on the right. Click on that, it takes you to this cost estimator page. And I just used our example here in our cost estimator. And the things I highlighted, those are the things you're going to want to go in and select to do this estimate. Pick grapes, you got your year, select your state, county, what type of grape are you growing. We use grape group B, which is how I got that $1,534 price. I wouldn't worry about selecting the map area. The practice, all practices for these are gonna, well, actually you can select your no practice specified. I think this one's OC, but it shouldn't matter. Put in your acreage, yield, rate yield, and then which is gonna be, it has a little, it's gonna be the same as your approved yield. And at least for this example, most likely it will be. And then your share percent is not 100 for 100%, but put 1 for 1.00 for 100%. And click on your get estimates. And what this is going to show you is you can look at the total liability amount you'll have, the total premium amount. I highlighted here a producer premium amount that was at 3,380. That's how I got that number. I went in here. So if you are kind of curious, like what it would cost, if you have an idea of what you grow, how many acres, you can go in here and play with this. It is our cost estimator, not cost guaranteer, but it should give you a very close figure to what you can expect to pay for a premium on it. If maybe this isn't for you, there are other insurance options out there. RMA offers a policy called the Whole Farm Revenue Protection. And this policy, basically, it just covers all of your commodities on the farm under one policy. It was developed essentially as an option for farms with specialty or organic commodities, or those marketing to local, specialty, or direct markets. It's going to protect against loss of farm revenue from natural causes of loss, just like the MPCI policy, the multi-peril stuff. Includes basically everything on your farm except for timber, forest products, or animal pets. This policy requires you to provide 5 consecutive years of Schedule F or other tax forms because it's a revenue policy based on your entire farm and it's based on your tax forms. If you're interested in learning more about that, I put a link for the fact sheet. Our national fact sheet for that goes into a little bit more depth. If you're in a county that doesn't offer the Grape policy, FSA does have a program called the Non-Insured Crop Disaster Assistance Program, or the NAP policy. That is an option for you. It provides a basic coverage equivalent to the catastrophic level of protection. Again, if you're in a county where the coverage multi-peril is offered, then the NAP is not available to you. But as you saw on our map, most of the counties in our region area do not have the policy. So this would be another option if you don't want to go the written agreement route. And there is a fact sheet for that on there as well. So the next step, if you're interested in grape crop insurance, and you want to know where to find an agent, on our webpage, under that tools dropdown again, we have a link to an agent locator. You put in where you live and it'll bring up a list of agents in that area. That's not an endorsement by RMA, it's just a service provided to help you find an agent area to hopefully learn more about the program if you're interested. And that's all I have for tonight, but are there any other questions?
Got a question a few minutes ago. It was when you were talking about reporting.
Yep.
You mentioned TTB at some point, and he was wondering if you could repeat what you were saying about TTB and how that's tied to self-reporting.
Oh, the tax, I guess because it is a government form, and it's, I guess, I don't know if it's I don't know a lot about that form. I found this in our handbook. So again, I don't have much background on that. This is what we're talking about, right? This Alcohol and Tobacco Tax and Trade Bureau form?
Yeah.
Okay. Again, I don't know a lot about how that form works, but I'm assuming that they put this in here because it is a form that's being reported to another government agency. There's some verification done by that bureau or not, but it's an option for those that don't sell to a third party. Because essentially, we need to have some sort of verification that the production that you're reporting is been verified somewhere, at some point,
Yeah.
by some outside source, or can be backed up by other documentation.
Okay.
And, I think there are other, let me look. I think there are some other options for those that are vertically integrated. And I have my handbook up. If you give me a moment here, I'll see if I can bring.
And then I have a couple other questions too, but if anyone else has questions, again, just hover your mouse around the screen and you'll see a Q&A box pop up as well as a chat box. You can type your question in either of those.
And also, before we go to the next one, I just want to mention that, my contact information is on that last slide, and I'll go back to that.
Awesome.
Please feel free to email me or call or reach out if you have other questions, or if I haven't answered your question well enough tonight. I mean, I can look into how they measure the acreage a little bit more in depth too, and get back to you on that. So I don't know exactly how they measure that off the top of my head, but
yeah,
I'm happy
to go back to that last slide with your contact info. I think that would be helpful.
Yes, I'm working on that. Let me get back to the. All right. And not only that, but this is a new program for us here in Minnesota, and we welcome input that people would have. I'd be happy to hear your input, your suggestions, ideas, criticisms, comments, and we'd be happy to listen to it and incorporate that information, when and where we're able to, if it works or fits for us. We are open into listening to, because this program is for producers, and so we want to hear your feedback. We want to know how it's working for you, or how it may work for you, or why it won't work for you, what we could improve. If it's within our abilities to make those improvements and to get them improved, we'd be happy to do that.
So one other question is, you mentioned that you have to report things within 72 hours of when the damage happens, or could you just clarify, like if it's something like winter injury, how would you determine when you need to report that?
Right, and that's where I think the flexibility, that second part where it says, but no later than 15 days after the end of insurance. So, if you have a hailstorm, and that hail hit your grapes, that's something you can see. That occurred, that damage occurred. You would want to try to contact your agent within 72 hours of that, so that they can get out there and appraise that damage in a timely basis. Now, like we were talking about the winter injury, some of these losses, it may have been wet, and your production might be down, but you can't really know by how much, and that's something you can do. You might not know that until you're harvesting, and that's fine. Then you can just say, look, we're harvesting, we think we're down, I think we have a loss here. Report that to your agent, and they'll follow up with the company, and they'll come out and start a claim.
Okay. If anybody else has any other questions, we'll stay on for a couple minutes, so you can still type those in. But yeah, otherwise, if you want to talk to Craig individually, there's his email. And I had somebody ask, is it separated by block or is it full production? I think he's referring to vineyard blocks.
Okay, I'll tell them to, I think I know what they're asking. If not, please stop me. So you're going to report it by block. And there's different ways. The better your records are. If you can get it down by block, it will benefit you, I believe. It'll be more detailed. Your overall guarantee is basically going to be a summarization of all of your blocks, but you can have a separate database for each block. And in fact, I think that's how you're supposed to set it up. But your overall guarantee is going to be, so if you have one block that's really bad and the rest were okay, you won't get paid on just that one block, because they're all considered one type under our policy here, or at least in our region, in the counties, in the states, in the Minnesota counties that we have.
Okay.
So.
All right. people are gradually logging off here, but so I just wanted to thank you real quick for coming on. I really appreciate it. And this webinar is obviously being recorded right now. So anybody who either, if people have friends who missed it, or if those who attended need a refresher, we're going to post that on our UMN Wine blog. So that's enology.umn.edu, and you can find it there, send it out to anybody who might ask for information. But I think we'll hang out for maybe a minute more and see if there's anybody typing a question right now.
Okay.
Otherwise, thanks everybody for attending.
Yeah, and thank you for having me.
He says, thanks, looking forward to hearing about the vineyard acreage layout and measuring details. So it sounds like you might get a follow-up.
Yeah, absolutely. I will do that. I'm looking at some of the other options too for records. And, one of the options was, I guess, they can have the company do appraisals, it looks like.
All right. Okay, looks like that's probably it for questions. So
Okay.
I'm going to log us out. Thanks again. Looks like it's still light outside behind you. So
A little bit, yep.
I'm gonna head outside with the dog real quick.
Sounds good. All right. Thank you very much.
All right. Thank you. Have a good evening.
You too.